So this DeFi bubble, how low can we get an order on Link? So hi everyone, welcome to the channel. If you are new, please do subscribe, hit the bell button, like, comment. I wonder if I can say that faster next time. So I do want to say thank you to everyone. I do appreciate the support. Please do support the channel. You know, if you do want to get additional content, that is coming soon, join the channel. But I want to talk about this. Now, I don't want to be that person that goes, I told you so, that things are going to turn around. I am sorry that sometimes my experience kind of clouds my judgment, and I am very, very pessimistic when it comes to the crypto YouTube sphere. Why? I've been here before, I've seen it, I've seen all the kind of bubbles, and this was a great little tweet here by Rocket Scalping, talking about the world of the DeFi projects from all-time high of the previous kind of like, what, 6 to 8 weeks, give or take, to now. It's not looking too shabby, is it? You know, it's a massive, massive drop, and the sentiment has changed. The realistic value of DeFi, is it a scam? No. Is there bad actors in space? Yeah. Is it dodgy? Yeah. But is there some good technology? Yeah. And I'm going to explain that in more detail. So don't just go, oh, dislike, go away. This is a great video with some great value explaining what I feel that will happen in the DeFi space moving forward. But bit of Max Payne first, I think. So moving forward into my channel, hi, hello. I was talking about this 2 months ago, the DeFi bubble. I was talking about the likes of Chainlink going all the way down. I was talking about all kinds of horrible stuff happening in the market. There's some huge, unrealistic expectations, in my opinion, regarding the DeFi kind of space. Why? It's speculation. It's how markets move. It's how all markets move, essentially, just speculation. DeFi is good. The world of it is actually quite good in reality in terms of what it aims to achieve. However, it's not done that yet. It's still speculation. It's still perceived value because it hasn't done what the mechanics are allowing it to, essentially. So with this in mind, let's have a little look. I'm going to go back in time in terms of articles. Crypto soars again as traders embrace DeFi and yield farming, but some echo of the 2017 bubble. This is where I want to talk about the 2017 experience for myself and ultimately other people that probably are subscribed to my channel. You probably remember it. Market went, yeah, boom, boom, boom. Right, it was like a roller coaster, right? It went all the way up, it went all the way down very, very quickly. Ultimately, it made people very, very rich. It also made people very, very poor, depending on what side of the coin you got on. Personally, I came out pretty good, but I could have been a lot better. I did not take profits quick enough and didn't realize that until quite a bit later. Bit of a bummer, really, but it's one of those things. You need to kind of go through that cycle to kind of learn. And if you are new to the space, i.e. you've been in the investing since 2019, 2020, hi, but if you bought a top at a DeFi project, you might have been a victim of a bubble. Is it a bad thing? Well, depending on how much you risk, but it's a learning experience. Too many people were giving me a little bit of jib, basically, on Twitter and on obviously other social media such as this as well, on comments going, oh, you're so pessimistic, just buy Chainlink at $18, it'll be fine, it'll go to $100. Well, that's not the game that you play as an investor. You don't buy high hoping it goes higher. You buy low and then sell high. So, all of this here, this article is actually quite a good little read. It's on fortune.com. And ultimately it talks about how all the kind of novelty coins that came out in terms of the food tokens, the animal tokens and stuff like that, they are flooding the space, and what has it done? It's hurt the space in such a way that people have lost money, they don't understand it fully, they've bought into it, they've bought liquidity, they've lost money, they're like, oh shit. The market is then gone. The sell-offs happened and people are running away. That creates that knock-on effect. It's a market cycle. People are not warm to it anymore, it's getting cold, all kinds of horrible stuff's happening. So that there is vitally important. But obviously as well, you know, DeFi is a complete scam. Obviously, it's not, in my opinion. I think there is a lot of scams in there. Let's just get that worded correctly. There is a lot of dodgy bad actors in there, so please make sure you do your research. If you found a coin, now, it's all on trends. It's all like the sort of like mechanics of how markets move. If there's an opportunity to make money and you understand what you're doing, go for it. If that means buying into copy coins because they're hot, go for it. Does it mean it's a bad thing? Well, depends on how you do it. If you've done it badly, i.e. you're late to the pump and you've ruined yourself, well, that's your own doing. But in terms of bad actors, these copy coins are not here to stay. They are just there as a rinse repeat to make money for traders and ultimately the owners and the founders that are making them. They also tend to come into my inbox quite a lot asking me to shill them. Apologies, but I know quite a lot of influencers that are shilling the same shit and they're getting paid for it. Oops. Did I just reveal that? Oh, sorry. Anyway, moving on. With all that in mind, there's all kinds of stuff that is going to come, in my opinion, to centralized exchanges, which is already happening on Binance, and most importantly, how the world of cryptocurrency technically should be working as a revenue mechanism, all kinds of good stuff. I've already talked about that in the past in previous coins, how they use the fees essentially to go back into the governance of the token, all kinds of good stuff. Now, where should we go from here? Should we talk about the good stuff? The good bit of technology that I like is actually what Binance are doing. The reason why I'm saying this is not because it's like just because it's Binance, it's kind of cool. They've taken the world of DeFi and put it into an incentivized version for their own exchange to lock up tokens in a much safer manner than the likes of going onto Uniswap and buying into tokens that you've never heard of. They've got a brand new Twitter account, they've got a brand new ERC20 token account, and they are basically Johnny McFartpants on Twitter going, who'll buy my coin? Yeah, these are real legitimate coins. I say that with a pinch of salt because Binance have obviously been caught out listing things because they want the competition going to them. Now, if you do want to save, and that's your idea of DeFi, it's to lock up your tokens as collateral to then increase lending elsewhere and credit and all kinds of good stuff. You then earn a buyback or a blowback or whatever you want to call it back to your account essentially. So likewise with this, if you are holding the BNB token, you can get an estimated of 43 point whatever per, well, that changes every day by the way, and you get back a certain token that they are promoting in their launch. What does that mean? Well, you get that back as, you know, that blowback essentially, and you can then sell it. This is instant by the way. You can buy it and you can take it out the next day. You still get paid, but whatever. You do not have a minimum lockup, which is pretty damn good. In terms of lock savings, this is higher. You can choose, but you can choose a more stable currency. 6.31% per year interest rate on Tether. Woohoo! That's awesome. Name a bank that you're going to ever get that. So this is a good side of it. This is cool. And then you've got activities where it's got all kinds of other bits and bobs. I've not really looked at that. But it's entirely up to you. Entirely up to you. But this is a good side of it. And this is where I think it's going to go, where you can lock up your tokens. You can get a nice, legitimate earning back, whether that is through the locked up stakings or if it is through the legitimate yield farming going through various different tokens. Winner, winner. So, shall we talk about the main token that has kind of caused the big boom, and that's Chainlink. I know I mentioned at the start of the video, it is also on the title of this video. I do apologise if it's taken a while to get there, but I personally feel, and I've said this before about oracles and stuff like that in the DeFi space. On the Crypto Mobcast, me and Andy did a bit about Chainlink. We did a review on it. I personally would buy Chainlink if it goes low enough. I do have some reservations in terms of red flags and stuff like that with like how much the tokens have been held by the team, how much they're actually selling, and most importantly, how centralized oracles are, which they are, we know that. Oracles are fucking huge and they require a video on its own to kind of explain how they work. But it is a centralized, basically, it is fully centralized with information that goes out to smart contracts. It's simply, that is how it's going to work. A smart contract cannot say whether a decision is yes or no, right or wrong, whatever, or a factual data. It goes off the permissions of what the smart contract has set, whether it's a yes or no, whatever. They need an oracle to tell you whether you've won something, whether you've won a bet, whether that information's happened, whether the agreement's fully going. That's the idea in simple terms. With Chainlink, it boomed, right? It went absolutely to the moon. And this is kind of like the overall chart on Chainlink. Top of bubble, $20, and then we seem to be coming back down. This is not looking good, by the way, as a basic thing. And I did a tweet today about people getting wrecked buying dips. A simple moving average would tell you if you are in the right place at the right time, whether that means buying into the lows or not. Or just use weekly levels. Too many people don't use weekly levels. They're a bit, people are scared. They just say, oh, it's down by 3%, I'm going to buy it, I'm going to buy it, I'm going to buy it. Doesn't always work like that. You've got to be calculated with this. So, let's talk about this. I'm going to put a little proposal out to you guys and say that I fully believe that we are going to see $5 at least on Chainlink. Now, whether you like that or not is another thing. Your mindset should be buy low, buy low, buy as low as you bloody can. Whether you do or not, it's another thing. I think it's going to go lower than $5. I think it's going to go down to $3.60, which is literally this level here. This nice little support bed there, which has been used as support and resistance in the past, it's got significant value in terms of price action. Is that a good place to buy? Well, we could go even lower. We could go even lower, which is where people start getting a bit upset and a bit worried, because it wouldn't shock me in the slightest if we went all the way down to $1.30, which is also a very significant resistance and support level. Would I put an order down there? Yes. Would I tell you I did it? Yes. Would I be happy to do it? Probably. The reason being, I see potential in the world of Chainlink, but I didn't see the potential in it when it was going cataclysmically to the moon because it had those hidden dangers. Tokens being sold by developers for developments. Really? People still use that one? The world of oracles are not fully secure and fully centralized still. They're still very, very new. The future of crypto, probably brilliant, but it's very, very new. It's very, very untested. I think Chainlink will be like Ethereum. I think when Ethereum goes back down to $200, $100, it's one of those instant buy sort of things where you know over time it will go up in value. Chainlink, I feel, has got that kind of ilk where if it goes down to $3, it'll probably pump back up to 10. If it goes down to like $1, it'll probably pump up to, I don't know, $5, whatever. It's always going to have that sort of range of movement. But it could also blow up as well in the next 2 to 3 to 4 or 5 years, whatever, depending on Oracle, depending on how they work, partnerships and stuff. But right now, we're in a downtrend. Can I get as much as I can? Well, probably. But if the DeFi market is going cold and the money is coming out of it and the liquidity is dying out, the likes of Chainlink, the likes of Kyber Network, the likes of Curve, all kinds of stuff where they're getting locked up, it's just going to diminish. So I mentioned today as well on a tweet, put a moving average on your chart to kind of see where things are. One top tip I will give anyone, and I mean anyone, put some moving averages on your daily chart and just to kind of use that as a reference. Now, I'm going to give you one little sort of, not so much lesson, but if you go into moving average on here, just a normal simple moving average, you don't have to go too deep. Even if you are looking on the daily time frame and you put the 100 in there, the 100 is a great place to kind of look at, in my opinion. Or if you want something a little bit faster, go for the 50. They're very, very generic numbers that work very, very well in the stock market. What does this indicate? It indicates that you can buy above and then you sell below, right? Take profits, whatever. You only need to rebuy again when it goes below this level. But that is not looking good. You can even change it if you so wish to and use what the stock market generally kind of uses is a 20 moving average, which again, it's a bit faster, but it works very, very well as a medium sort of guide of where the trend is going. As you can see, down below, oh god, looking horrendous, and it still is below. It is forming a trend to the downside, but you've also got high, lower low, lower high, lower low, lower high, lower low, lower high. What's happening next? Well, it's a trend formation. Use trends. They are your friend at the end of the day. Do not be that person. Do not be that guy that goes, oh, I'm going to buy it because it's down by like 3%. You will get wrecked because it will keep dipping. Keep on dipping. So, video done. Hope you enjoy. Let me know if you like it, and I'll see you again tomorrow.